Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap Session for July the 6th, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we come together to take a look at the market, macro to micro, take a look at the structure of the market, then drill down to our targets, our trade levels, and our hypotheses for the day. This is a subscription room, so if you're interested in checking us out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do this every day, pre-market, and then we do live trading and analysis during the course of the day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so let's just take a quick look at the news. Today is the Fed meeting minutes being released. That will be the main thing, plus the ISM manufacturing. So we had Canadian trade balance and U.S. trade balance. Both came out a little bit larger than expected. 9 o'clock in about 10 minutes, we've got FOMC Tarullo speaking. We've got final services PMI at 9:45, and then we've got the big news this morning at 10 o'clock, which will be the ISM non-manufacturing PMI, and then at 2 o'clock we've got the FOMC meetings. So fair amount of news today. Don't forget about the Pitbull low. This leading up into next week's Fed announcement. Usually they have a low put in on Thursday and Friday, and considering that we're trading below 73, I am eyeing that 42 very closely. But we'll get into that in just a few minutes. Yesterday, our main hypo did not play out, but our hypo, we had a combination of hypo 2 and hypo 3. Hypo 2 was a move down to the 79 area, chop, and then push down lower towards that 67.50 area and possibly down into the 61. So we kind of saw that play out. And we didn't get as low as the 67.50, but we put a double bottom in. We left that double week low at 72.50, and overnight they went down and took it out and actually hit a week low and a month low of 2066.75 in the Globex session. We're currently trading right now 69.75. But let's just back up a bit, like I usually like to do, and start with just looking at the basic element of where we are in the different time frames of the trend. We start with a monthly simple candlestick chart, a 9 EMA, 20 SMA. I'm looking for slope and separation, the strength of the trend, and where it's being challenged or violated with the close below the 9 and the 20, and where we are in consolidation. We had a beautiful trend up on the monthly, tested it in 2015 at the end and beginning of 2016. So far, we've taken that back the last 4 months, and we're above the 9 and the 20. We're in this consolidation near the all-time highs. We still have an unadjusted all-time high at 21.34 and an adjusted all-time high at 21.1975. We're currently above the 9 and the 20. The 9 and the 20 on the monthly is going to be in that 2040 area. Remember, we're back inside that value area that starts at 73 and works its way down to the 13 level, with 2042 being the composite VPOC and the microcomposite VPOC. But the monthly is showing sideways consolidation with a possible upward continuation of the trend. On the weekly, we when we started this trend up, we had that naked cross we were talking about for a couple weeks, well, numerous weeks, and we finally went down. They broke below the 9 and the 20, and they pushed it down into the naked cross and at 2083, and then they rallied, and then so far this week we're coming back and testing the 9. We've lost some separation. We still have slope, so we're still we're challenging the trend, but we're not violating it. We're currently still above the 2065.75, the 9 EMA on the weekly. If we get below that, a move down to the 2051.24. I'm looking at 52.50, but 21.51.25 is the 20 SMA. And there's an intermediate target at 2061 that we'll talk about. Going to the daily, again, more just consolidation, but we are challenging the 9 and the 20 again here on the daily. So on the weekly and the daily and the monthly, we're challenging the trend lines or the moving averages. But basically, we've got consolidation and chop right now in this area. Break below the 2171, which we're sitting at right now, takes us with the possibility of a downward trend starting on the daily. On the 4-hour, you can see we do have we had a strong upward trend, and then they rolled it over, and now we're moving down. We've got slope and separation to the downside. There is a naked cross up here at 20.88 1/4. So mark that down in your journal. That's on the 4-hour. It's a larger time frame. Always remember the time frame you're looking at. And then there's another one down here at 2017. At 2017.09 or 2017 is a key area because it's the lower part of that value area. But we do have the start of a downward trend. We've got slope and separation to the downside on the 4-hour. Going to the 1-hour, you can see very strong trend. Tried to take it back here, continuation. Tried to take it back here, continuation. We've got slope and separation. We just rejected the 9 yet again, and a move up to the 9 will take us to 72.50, but we do have a downward trend on the 1-hour. On the 30-minute, same thing. We are challenging the 9 right now. We're losing some slope, so they might have found some intermediate buyers down here at 66 level, and we're rotating back up, but we're not above the 9 or the 20. A move above the 71 takes us up into the 73 to challenge that key line in the sand and the SMA, 20 SMA on the 30-minute. So sideways, possible challenge of the downward trend on the 30-minute. On the 15-minute, same thing. We're actually above the 9 right now. A move up to the 20 takes us up to 72. We're losing slope and separation, so we are finding a basing pattern here, possibly, but we have to see if we can get back above the 20. There is a naked cross up here on the 15-minute at 20.75 1/4. These are targets for when we violate the trend, just if you're not familiar with naked crosses. And then going to the 5-minute, we're basically just sideways action right now with possibility of a start of an upward trend, but no slope and no separation, just sideways. And we don't really have any naked crosses that I can see of on the 5-minute. So let's take a look at the structure. You can see that yesterday our key line in the sand was 73. We went down and challenged it during the RTH session and got as low as 72.50, 2 ticks below it, and then they rallied strong into the close. We closed up at 83, and overnight they've taken it back down through the 73 and went down and hit the 66.75, or sorry, 66.75, which basically came to near the close of this day right here, which was 67 and a quarter. We've since have come back up and challenged the 73, but we have not been able to hold above it. We're currently trading 71. So looking at the big picture, I want to bring this in as well. So in the last quarter of 2015, we had this double distribution microcomposite with the upper Gaussian distribution with the VPOC at 54.50. That should be a target that you should write down on your journal, 54.50. Fourth quarter microcomposite VPOC as a target below. And then the lower part of that, the microcomposite LVN is sitting at 2007. On a shorter time frame, we are back in this microcomposite that runs from March the 17th through to, and I'll actually bring in yesterday, and our value area high is at 2079.75, right around that 79, and our value area low is down here at 22, and the microcomposite VPOC is at 42. Now we've got multiple distribution zones. There's a microcomposite HVN at 63. I was talking about this last night, that was a possible bounce area. Didn't quite get that low to 63, but keep an eye on that. Keep an eye on the 54 from the 2015 last quarter. But basically, it puts us in this distribution zone that is centered around the 42. The 42 is the microcomposite VPOC. It's also the composite VPOC going all the way back to beginning of 2013. In the RTH session, if I bring the Globex in, our composite VPOC, so if I bring in all the overnight volume going back to the beginning of 2013, our overnight VPOC, our composite VPOC is 52.50. And it's basically, we have four main price points, or what I call undetermined fair value, actually five of them: 61, 52.50, 46.50, 42, and 31 in this distribution zone. And we're likely, if we cannot stay and get back above 73, to move down here this week and come down towards this 42. I've got my eye on that 42. And considering that this is typically a bearish period on Thursday and Friday based on the pit bull low before FOMC, we've got to be cognizant of that fact. So 73 still remains our key line in the sand. And above 73, I want to be long. Below 73, I want to be short. And that's basically in a larger time frame. I'm not saying I won't get long down here if a setup comes, but I predominantly want to be short below 73 and predominantly want to be long above 73, especially if we get above the 2079.75 or 2080. 2080 was a key pivotal price point for us yesterday, so it should play that effect. And with it being the microcomposite value area high, that is quite likely. Key points to watch for this morning: key line in the sand 73, above 79, 79.75 to 80, and then above that look for a move up into 81, 85, 88, and then the other key line in the sand above is going to be the 93 and a quarter. Above 93 and a quarter, I'm looking for a move back up into the naked VPOC, that is up here at the 2096 area. 95.75. We'll take a look at it in just 1 minute. But below, we've got all these price points that we need to deal with. So let's just grab our Globex chart. We've got 25 minutes to go. It doesn't look like they're going to put in another overnight low. So we have an overnight low at 66.75. And we're going to take this out right here because we don't need that right now. We have an overnight high of 85.75. Basically near the highs of yesterday. And then we have a VPOC, which is not likely going to change at 71. And then we've got this B-shaped profile, which is basically a long liquidation and possibility of a move up today. Got an LVN here at 75, and their value area was 75.50, so that's going to be a definitive trade area for us. And we've got one at 79, but we already have the VPOC there. So there's really not much more that we need from this profile overnight. Notice that we had very strong kurtosis, very strong Gaussian distribution, very, very balanced day yesterday. We just chopped around that 79 as we moved through the day and dipped down and checked the lower side of balance, but popped right back up and rotated into it. So let's move this over. Don't need this. Expand this out. So obviously, key line in the sand is not going to change. It is going to be 73. It's actually, I think you've got to encompass. I'm going to take this because I'm going to change this here to a trade area. So this is all going to be about the 73 to 72.50. You don't want to be long until we're above 73. And you want to be long into your first target, which is going to be 74.25. A little HVN from the yesterday's session, and then we've got this LVN here at 75, and then the value area low at 75.50. So if they reject this level, look for them to rotate back down and test the 73. But if we get above it, we're targeting 79 with an intermediate target at 77.50. And then we had a pretty tight value area, so if we get back up here and we stay in it within 2 TPO counts, then I'm expecting a probability of a push-through value, an 80% destination trade up into the value area high, up into 81. And then above 81, we've got 85, which we've already identified with the overnight high. There's a little LVN here at 84, so I'd be watching this 84.50. And then we've got the high, and above 84.50, I'm really looking that we're going to, the range of the range high of the day is not going to be as big a factor as this 87.50 and 88.50. I was actually very surprised yesterday that we left those alone, getting so close to them. And then above that, all our regular levels are there. We've got the 90.25, the 93.50, the naked VPOC target up here at 95.75, and the range, is it range low or range high? I hate when that happens. It's not going to be a trade area, that's a target. I don't know where we just moved that from. Range low there at 89. So we've got a lot above us. And then above 90, we're back up inside of the Friday and the holiday Monday, and targeting the 98. Our daily ATR is running 30.14, 20-period daily, 30 points. So based on the overnight low, our daily upside target is 2097. Our weekly ATR is running 55.75. It's all the way up here at 21.22 for the upside target. And then the downside, our daily ATR target is 65.75 off of the overnight high of 85.75. And we're currently trading here. So below the 73, I would be targeting the overnight VPOC at 71. And below the 71, I'd be looking at the where was it? It was right there, 68.50. And then below that, the 66.75. There's an intermediate target at 67.50. Our daily downside ATR at 65.75. And then there's not a lot here, all the way down to the 61, and that's still going to be our key target below the key line in the sand. I just want to see intermediate targets here. There's 62, 66.25. We already have that. 62.50 would be really the first thing that I would see that could give us a bounce. And then 61, and now we're back into this area right here. We've got the 54, this should be 54.50. The 52.50, remember the 52.50 is the composite full session composite VPOC going back to the beginning of 2013. Our weekly downside ATR target still gives us range down to 48.75, but that could extend. And then we have the 42, the 34.75, the 31.50. All these numbers you should have off by heart now. All right, so let's look at hypothesis. Right now, we're going to open, just outside of range or just inside of range. So my immediate number one hypothesis is an open auction just in range or just outside of range. A push-up, well, that's where my trade level went from. A push-up into the 74 to 75, possibly the 79. But I'm looking for responsive sellers to step in somewhere between the 74 and 79 area, and then rotate us back down through the 73 and down towards the overnight low, take out the overnight low and test the daily downside ATR target, chop around in the 65.75 to 68.50, and then get a continuation wave down towards the 61, and 61 is my main extended target below. So Hypo 1 is a push-up responsive buying up into the 74, 75, maybe 79 area, but I'm looking for rejection somewhere, and then rotation down through the 73, 72.50 range low from yesterday, push down into the 68 to 66.75 chop, and then get continuation down into the 62 to 61. So that's Hypo 1. Hypo 2 is an open auction move up into the 75.50, chop around in this area, then push up into the 79, chop around in this area, testing the value area high, and then a late day probe up into take out the overnight high and this 87.50, 88.50. So hypo 2 is a push up, chop around, push up again, chop around, and then late day probe up into the upper distribution of yesterday and possibly into the 87.50, 88 area. Hypo 3 is an open auction, failure somewhere here, a move down into the overnight low, push down to the 61 area, and then slowly start working our way up and closing somewhere in between the 73 and the 79. So initial push failure, come down, find buyers down in the 61 area and rotate back up into yesterday's range, somewhere inside of yesterday's range. And then hypo 4 is an open auction, a push down to the 66.75, chop here, then get continuation, and then break through the 61 and come down into this 52.50 area and close down inside of this undetermined fair value. So those are my 4 hypotheses. I'm not going to worry with gold. Gold continues to rally. It's at 1372. We'll look at it. We said that we were looking for, we got above the 63.50 yesterday, that we were looking for a move up into the 77.40. We did get that move. Now we're doing some backfill. Key line to watch is the 63.80. If we get below that, look for them to move back down into balance in around the 1353.60. But if we can hold the 63, I'm looking just to see gold chop in around the 77 and accept this value before making another leg up, if that's what we're going to do. We've made a pretty good run in gold, but due to the unstableness of the global markets, gold could continue to push up and test that 1400 level. Anyway, that's going to complete the pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.